A little late to the party. It's 8:14 in the morning, and it's just one of those days, you know what I'm saying? Oh yeah. So I want to consider this episode. I want to consider this um an episode of the Market Odyssey. I don't think I'm gonna be taking a trade today. Uh, FOMC meetings. Sorry, it's early still. I had a cup of coffee, but it is what it is. I haven't slept. Been working. Um, so forgive me if I'm a little slow, but I'm gonna consider. I don't think I'm gonna take a trade today. I'm just gonna chill out. Just gonna chill out. Just gonna get do some content and just watch the charts. For anybody who does want to take a trade, you know, I'll say it like, oh, this is good right here, right? Like if we make lower lows right here, if it goes below, if it goes below 25, 27, then we're gonna see more downside. That's just easy. But I want to take a second to, like I'm gonna consider this an episode of the Market Odyssey, and I think I'm gonna title it Rules. Yeah, I think I'm gonna title it Rules because you need certain rules when it comes to trading. You need rules in general. You know, if this is a low, if this is a low, and it reverses, then it's looking like we will have more highs. Yeah, it feels like it's another low. So, like for example, if we break below this right here, then it's a wrap. But if we stay here and it just closes here and we ride it up, then I see more gains. I'm seeing more gains. Eh, maybe, maybe. We shall see. Anyways, today's the FOMC meetings. Sorry, FOMC minutes. And um, for those of you that don't know, the FOMC minutes is basically the conversation on paper of the Federal Reserve's decision on the interest rate cut that we had. So they released their minutes, meaning their conversation, right? Because they have their conversations where they come to the collective agreement as to what they're going to do. And then they have their press conference, which is where they design what they're going to say to the public based off of the decision that they made, right? But the minutes you see what they actually were saying to each other. That comes out today at 2 p.m. So we're gonna take it slow and just, watch the charts. By the way, this account has been funded, right? So I took a trade by accident and made $56. I closed it. I was just like, ooh, I could have left it open, but rules, right? So, excuse me. Um, I I really do hope you all can hear me though. Cool. Yeah, I really hope you all can hear me with my Wi-Fi password. Um, what can I say? My brain is fried, super fried. It's looking like this is gonna be a higher low, right? So let's get into it. Let's get into it for real, for real. Because right now we're just looking at the chart. It could do whatever. Ideally, if it does reverse, we would want it to get back to uh 25.87, and then we would be able to get in. Um, but personally, I would like I would like to have new lows made. Like right now, this is probably a higher low being made right now. So when it would go to make higher highs, the idea is for it to go above 25,087 and push past 25,111. You know, that would be the idea. And that's like a what? A $25 spread right there. Yeah. So 25.87 to 25.87 to 25,111 or 112 would be a $25 spread. Um, that's an easy grab right there. You know what I'm saying? But we want the lows to be made so we can get the higher highs. Because when it comes to trading, to keep it very simple, trading is based off of three things, right? Trading is based off of three things: price action, market structure, and supply and demand. Right? Price action, market structure, supply and demand. It's fairly simple in theory, very hard in practice, right? So when I say that, price action is obviously what price is doing on your screen, right? Price action is the movement of price. Market structure is the structure to which the structure of what price has done, right? The structure of what price has done. That's what market structure is. Structure of what price has done. So if price had hit new highs and then it made some lows. So it went up, made new highs, and then it went down, and it made some lows, and then it made higher highs, then it went down again, but it made higher lows, then it went up again, made some higher highs, and then went down again and made higher lows. That's market structure, right? That's what price has been doing for the last however long you're looking at, right? So third one is supply and demand, right? There's certain key levels when it comes to these price. And to keep it simple, what I mean is there's certain levels to which there's either a lot of selling going on or a lot of buying going on, right? So for example, here in my chart, if I were to zoom out, go like this, right? let's go to the 15-minute because it's the spread is so basically what you're looking at right here, right? So this, uh, this right here, right? So this would be considered a key level, right? On this range. So like 25, 27 to about 25, 42, right? That's a key level right there. Why? Because it's a major pivoting area. There's a lot of volume there. When I say volume, I mean there's a lot of activity in that certain spot. There's enough activity there to pivot the price action, right? So there's enough activity, there's enough buying here to make price pivot, like right here, right? And like right here, right? And like right here, right? And now like right here, there's enough activity there. Activity, right? There's enough activity and a volume of one side of the coin because there's two sides buying or selling. There's enough activity there to make price pivot. That's a key level. That's an important level, right? So if price were to get there and push below that pivot area, what does that mean? That means that we understand that sellers are in control now because it got to a key level where buyers are significantly stronger. If it were to push below those prices, it means that sellers are dominant at the moment and would continue to be dominant until higher lows are made. Right? So to recap, trading is about price action, market structure, and supply and demand. At this area, this key level, there's a lot of demand. That's why price gets there, pivots, and then moves back upward. Just like how at these levels up here, there's a lot of supply or resistance, right? Because you can either say here for demand, right? Or you can say support. It's the same, the words are synonymous with each other. Demand and support are synonymous, right? It doesn't matter which word you say, they both mean the same thing. Glad we cleared that out. Now, up here, right? Up here, there's a lot of resistance. Yes, resistance, or the other word for it would be supply. So, that being said, supply, demand, supply, demand, support, resistance. Good. Now, that's all trading is. Those three things. You don't have to make it complicated. The simpler you keep things, the more money you will make. Because if you overcomplicate things, then you're gonna have too many confluences. You're gonna be too wrapped up on your checklist as to what's supposed to be going on. You don't know what's supposed to be going on. You're not God, right? You're just along for the ride. To keep it very blunt, you're just along for the ride. You're not there to do anything but get in, ride the wave, and get out. That's it. Like, you don't have to make things complicated. Because if you complicate things, then you make it harder for yourself to trade. The simpler you keep things, the easier it'll be to pull the trigger. Simple as that. You don't have to sit here. Like I have indicators, sure, right? But they're like my guardrails, right? I don't need them. I can just do this. Boom. It's just a chart now. And I can still tell you if we're in a uptrend or a downtrend. How can I do that? Okay, this is how I do that. We're gonna move to this empty space right here. So I can explain this real quick. I can look at this and tell you if we're in an uptrend or not. How do I do that? Very simple, very easy. We're in an uptrend when price is doing the following. You have your let's so if I were looking for an uptrend, this is what I would be looking for. I want price to make a high. Boom, a high was made. Now I'm looking for price to make a higher low. That would be here. Then I would wait for price to make a higher high, right? And then guess what? I wanted to do a higher low. You're so smart. Now I'm looking for a higher high, and then a higher low, and then a higher high, right? That's what I'm looking for. If I were looking for an uptrend, that's what I'm looking for. Because each time it makes a higher low, that's an indication or a confirmation that we are in an uptrend, that we are continuing in uptrend, right? All right, how do I tell if if it's reversing, right? Then I will look for a lower low, right? We just made a higher high and then we made a lower low. Then we made a lower high. Oh, look at that, a lower high. Then a lower low. Then a lower high. And then a lower low, etc., etc. If I could just, anyways, I'll delete it. I don't know how to stop. All right. And then this would be breaking the uptrend. All right, and then we make a higher low. Anyways, to go back to what I was saying. This is what I would be looking for, right? So here, for example, you see how we made some lows here coming down. Then we made a new high. All right, cool. Then we made a higher low, right? Made a higher low. Didn't make a higher high yet, because this is the high up here. But we made a higher low. See? And then we made a higher high of that one, and then a higher low, slightly. But then we made a new higher high. And then we made an equal low. So right here would have been an indication for what? Either we're going to have the next move be a lower low, right? Or a higher high, a higher low than this one. So we got the higher high. Boom. This would have been it had it just kept going, right? This would have been had it just kept going, but it wasn't. It made a lower high. See that? And a lower low. So how can we get saved from here? It would have to make a higher high than this one and a higher low than these. If that's not the case, it will continue down, right? Like here. Higher lows, higher highs. Higher lows, higher highs. Higher lows, higher highs. And then lower low than the previous low. Then lower high. Then a lower low than that low. And a lower high. Then a lower low than that low. But then a switch, right? A pivot would be a higher high and a higher low. To keep that very simple, right? So I don't need to see the indicators to know if we're in an uptrend or if we're not in an uptrend. I'm just looking for higher highs and higher lows. The indicators illustrate what price is already doing. It's not going to tell me what price is going to do. It can tell me, look, price is in an uptrend and it's a significant uptrend. Or price is in an uptrend, but it's not a very strong uptrend, right? That's what the indicators do. They tell you what price is currently doing, not what it's going to do, right? So it's helpful because I can see it and say, okay, so it's sort of in an uptrend, but it doesn't have significant strength. It doesn't have enough strength to push for higher highs and higher lows to a drastic degree, right? It's not oversold, but it's also not overbought, at least in this time frame. If I go to the 1 hour, which is the one I like to spend the most time in, here you can see it clear as day. We got some lows. Higher low, higher high, higher low, higher high, equal low, higher high, higher low for now. If it were to solidify this and go up to make a higher high than 2511, 2511, then it would solidify the uptrend. Well, the solidification would come with the higher low, right? So, and you would, damn, I shouldn't have deleted the other one. You would target for an entry, right? The not the most recent high, but the one that came before that. That would be entry. So in this example, my entry wouldn't be here. My entry would be here. That's why I put this little marker here, this trend line, not trend line, this horizontal line at 2587. Because it is the high, it's the previous high to this high. Right. So if this were to solidify and go up, if I'm bullish, right? If I see price has strength, when I say strength, I mean momentum, right? When I mean momentum, I mean it's clearly shown on the MACD that an uptrend is highly likely, right? Like over here, right? Like over here, right? Where's another one? Like over here, right? This one was significant. And it was another man turn. All right. So if I see price has significant momentum, I would place a buy order right here, sit back, let it make its higher high, and in the achievement of the higher high, my TP would be hit, I'd be out the trade and I'm done. Simple. Here's that. Right? So it's very simple, but it takes repetition. It takes a lot of repetition and a lot of patience. Because if you don't see the setup, then don't take the trade. Professional traders don't trade every single day. They don't. They will never trade every single day because there's never always a setup. Like currently right here, I honestly want price to close down here to solidify this low, right? I want it to solidify this. And then I want it to give me a nice, in my case, blue, but in your case, it would probably be a green. I wanted to give me a nice Marabaz, just one long stick. No wick, no nothing, just one long stick going up, right? And then hit some resistance here, right? And then break past this right here, keep going. That would be an ideal scenario to hit like probably the 50-day moving average. That would be an A1. Is it going to happen? Probably not. Probably not. Am I bugging? Not at all. Am I impatient? No. Am I tired as fuck? Absolutely. Doesn't matter. Not in the slightest. Not in the slightest. So, what are the rules? Right? Because I said at the beginning of this, I would have rules. I mean, I would name this episode rules because I'm gonna consider this an episode in the MFR Odyssey. Rule number one: wake up early. That's rule number one. Wake up early every day. Every day. Every day. And if you stay up late and you don't think you can wake up early if you go to sleep, stay up. Get some work done. Drink a coffee, Red Bull, whatever you need. You know, stay up, get some work done. The hour will arrive. You will be able to do your work. Tip for my lunatics out there that will just stay up. I'm one of them. Do some exercise before you start the work. It'll help. Trust. Um, any exercise will work, but I've found that running and 100 push-ups are the best remedy for fatigue. So that's rule number one. Rule number two: only trade when you believe in the trade. And it's okay for it not to be the case every day. Like I said just now, you shouldn't trade every day. You should be in front of the charts every day. Hear me well. Hear me well. You should be in front of the charts every day. But if you don't see the setup, don't trade. Don't force something that isn't there. Do not force something that isn't there. It's okay for you to look at the charts like I'm doing right now and do nothing. It happens. It really happens. Honest to God. Happens to every person in this profession that is successful. The unsuccessful will jump in when there's nothing to jump into. And they'll blow their accounts. They'll lose a lot of money. If you don't need to, don't do it. Just don't. It's better if you just don't. Right? It's better if you just don't. Rule number 3. Manage yourself. Keep yourself tidy, strict, and just manage your overall mental state, your emotions, how you're thinking, what you're thinking about, how you're feeling towards the chart that day. Just manage yourself. Number 4, stick to one slot size and stay there until you can afford to lose 1 week of using that slot size success. For example, if you make $4,000 in a week, $3,000, $2,000, doesn't matter. Whatever you make during the week using that slot size is what you should be willing to lose per trade if you want to increase your slot size. So if you trade with 2 contracts, 2 slots, 2 lots, whatever you want to call it, then if you're not comfortable losing $3,000 in one trade, you have no business moving that number up. When you do feel comfortable or financially comfortable to lose $3,000 in one trade, yes, you can move your slot size to 5 instead of 2, and you can trade that. Your wins will reflect your discipline. I forgot what rule I'm at, so the next rule. Be kind to yourself. You're gonna make mistakes, but be consistent regardless of your failures. A lot of people get wrapped up in negative talk. I myself am included in that. I have my faults, but be okay with losing and still being your friend. If you lost some money, pat yourself on the back. You're just a human. You're only human. It don't work out today. Doesn't mean it won't work out tomorrow. Be kind to yourself. Next rule. Be relentlessly dedicated and consistent. Never stop. Never stop. Doesn't matter how bad the failure is. Never stop. Never, ever, ever stop. Your determination will determine your success. I'll let that one sink in for you. The computer's about to die. I haven't taken a trade. And it's looking like there's some strength here, but not enough to make me happy. Not enough to make me happy. It does seem like a higher low. So my buying price would be $25.87 with a $25 spread. You do what you will with that. Right? You can enter in at 25.74. That's a riskier bet because you still have to work through the 50-day moving average and the 20-day moving average. But at 25.87, you would have beaten those. And the next thing would be touching the upper Bollinger Band, which is sitting comfortably at 25.110. So I think I'm gonna wrap it up there. Honestly, I don't think today's episode is gonna be very long, but that won't stop the grind. I'm gonna leave you with this. If you decided you wanted to be a trader, then be ready to grind. I didn't want to wake up. I mean, I didn't want to stay up, but I did because I must grind. I don't want to do half of the shit that I do, but I do it because I must grind. I don't want to feel the way I feel when I lose trades, but I continue on anyways because I must grind. It doesn't matter what you go through, it doesn't matter what you're dealing with, it doesn't matter how you feel, it doesn't matter what you're thinking about. Do what is required because you must grind. I'll leave you with that. It's MFR. The day doesn't end for me here. There's a lot more to do, but love you, family. Stay disciplined and keep grinding. Just keep grinding. Don't stop. Ever. Ever. Never stop.